Good afternoon, everyone. I'm Saisha, and on behalf of Kirin Advisors, it's a pleasure to welcome you all to Investor Conclave, Investor Connect Summit 2026, powered by Avinash Mentor and co-powered by Kirin Advisors. Today marks second day of our two-day summit featuring a powerful lineup of focus management meetings. I welcome you all to the interaction with Pajson Agro India Limited. From the management side, we have with us Mr. Ayush Jain as Chairman and Managing Director. Hello, sir. We have Mr. Pulkit Jain as non-executive and non-independent director. Hello, sir. From Avinash Mentor team, we have with us Ms. Jagruti. Hello.
Sir.
With that, now I hand over the floor to Ms. Jagruti. Over to you.
Before we start the section, let's have a quick overview about the company. Pajson is a vertically integrated cashew processing company, transforming raw cashew nuts into premium graded kernels for India and international market. The company operates a modern, fully automated manufacturing facility in Andhra Pradesh, 18,000 metric tons installed capacity, supported by a pan India distribution network and a growing retail presence through its customer brand, Royal Meva. With that, now I transfer the floor to the management for a brief overview. Over to you, sir.
Thank you, Jagriti. Good afternoon, everyone, and thank you for joining us today. It's a pleasure to be here and to have the opportunity to interact with all of you. At Pajson Agro India, we remain focused on building a stronger and a more resilient business while creating long-term value for our shareholders. Over the past few months, we have made meaningful progress across several strategic initiatives that we believe will support our next phase of growth. One of the key developments has been the appointment of Mr. Wu Chai Son as our strategic advisor. Mr. Son brings more than 3 decades of experience in the global cashew industry, spanning across sourcing, processing, quality management, and international trade. Vietnam has been instrumental in shaping the global cashew industry, and his extensive industry knowledge, partnerships, relationships, and strategic perspective will strengthen our capabilities as we continue expanding our presence in domestic as well as international markets. Cashew industry today is evolving rapidly with increasing emphasis on supply chain resilience, consistent quality, traceability, and efficient sourcing. While the industry continues to navigate changing trade dynamics and geopolitical developments, we view these changes as opportunities to further strengthen our competitive position. Over the years, we have built a diversified sourcing network across key African producing regions, established long-standing customer relationships, and developed a processing ecosystem that enables us to cater to both institutional and retail markets. These capabilities provide us with a strong foundation for sustainable growth. We are also making steady progress on our greenfield manufacturing facility in Vizianagaram, Andhra Pradesh, which will enhance our processing capacity and support future demand. At the same time, our consumer brand Royal Meva continues to strengthen its market presence and remain an important pillar for our long-term growth strategy. Going forward, our focus remains on disciplined execution, expanding capacity, strengthening our sourcing ecosystem, and building a scalable business that delivers consistent value over the long term. With that, I would like to thank you once again for your continued trust and support. We look forward to sharing more about our business and addressing your questions during the discussions.
Investors, now floor is open for Q&A. You can raise your hand or you can drop your question in the chat box. Yes, Chetan sir, please go ahead. Hello, Chetan sir.
Can you hear me?
Yes, sir.
Oh, great. Thank you. Okay, my question to management is that uh, since we are just one quarter into the current financial year, what will be the drivers for the company's growth in the current financial year in terms of your business segments. And if I look at your raw material cost is up by 60 more than 60% for year on year this fiscal. So how are you insulating yourself from that in the years to come? And you may also comment on your inventory levels as well as on the receivable days. Thank you.
Okay. In the current year, we are expecting a growth of nearly 15% from the current facility, and we will also have additional processing capabilities coming in from the new plant, which we expect to go under trials in December. So we are expecting additional volumes from there. So overall, from where we see currently, we are looking at about 35 to 40% growth in the current fiscal as compared to last fiscal. In terms of raw material costs, yes, they have increased over the years, but those are related to the movement in the price of the product, which is raw cashew nuts, which is essentially driven by demand and supply. So we have seen a considerable improvement in demand on a global level, and that reason can be attributed to that. In terms of inventory levels, if you compare our inventory on 31st March 26 as compared to last year, you'll see a considerable amount of difference, primarily because in the last fiscal, our plant was shut for 45 days as we were going through expansion activity, and there was a major machinery change that was happening. And so that is why deliberately we had planned lesser inventories, because the new crop starts coming into the Indian ports in April and May of every year. So March is always the time when we are ready to welcome new crop. So that is why the inventory levels increased as compared to last financial year. The last point which you mentioned regarding our debtor days increased primarily because of one reason, that our share of wholesale versus institution in last financial years was where wholesale was dominant over institutions. But now, as in how we are progressing, more and more institutions are having the confidence on us, and our share of institutional sales is increasing. And with institutions, there comes a credit period. So that is why our debtor days have increased.
Okay, if I can ask one more question. So you said the raw material costs increased because of the raw cashew price have gone up. But in your contract with the customers or within the distribution, do you have any pass-through clause, or are you able to pass on any increase in the raw material cost? And on a sustainable basis, what kind of EBITDA margin can we assume for a business like this?
See, in this, if you will see, the movement of the commodity prices happens at the both ends. It happens at the raw material end also, and it happens at the finished product end also. So we have seen over the years that if the raw material prices are moving, we see the impact of the same coming in to the finished product also, and we are able to pass on those increment to our customers. Same in the reverse manner. If the prices are coming down, so we are able to same reduce our prices for our customer also. So hence maintaining our EBITDA levels, and in this business we see definitely what margins we are currently earning. We see a stable margins ahead also.
Fair enough. I have more questions. I'll join back the queue. Thank you.
Sure.
Yes, Miss Nishita, please go ahead.
Yes, am I audible?
Yes, ma'am.
Hello. Yeah. So you mentioned that from our current facility, which has the capacity of 18,000 metric ton, we'll do 15% growth, and on blended level, we'll do 35 to 40% growth with the new facility coming in. But from what I understand, the new facility is going to come in from Q3 onwards. We'll do the trial run from Q3, and that is the capacity that has a capacity of 35,000 metric tons. So, when you say that we'll have 35 to 40% growth, what is the rationale behind that, and how are we going to achieve the 35 to 40% growth? Also, how fast can we ramp up this new facility?
Okay.
So the growth numbers are, very clear. So like last year, what we did, the growth comes for us from our production capacity. So last year, if you will see, we did about 15,000 tons of production this year. In fiscal year from our current plant, we are going to do about 17,500. So that is why we say about 15% growth from our current plant. And from the new facility, which as you rightly said, is going to start only in end of the year. So we are only calculating about 4,000 tons from the new facility out of 35,000 tons. So if we see the total number, this fiscal year, we are going to reach about 21,500 metric tons. So compared to last year, so that is how we are very confident of 35 to 40% growth within this fiscal year. And even going forward for the next upcoming fiscal years also in FY27, FY28 and FY29, we see 50% growth for the company from the new facilities.
Okay, understood. And this 35,000 metric ton is phase one of our expansion. Is that correct? Or is that the complete expansion that we are doing?
So we have raised funds for this 35,000 tons as of now. So first, our target is to establish this 35,000 tons and achieve the efficiency in this up to 85% levels. And as we are achieving that in another next 2 years after we start, then definitely, we'll plan more capex for further growth.
Okay, okay, understood. Yeah, that is it from my side. Thank you.
You're welcome.
Investors, you can raise your hand or you can drop your questions in the chat box. In the last call, you had mentioned that there has been deliberate effort to reduce the dependence on our group company based out from Dubai. What you can give a number to what extent are we planning to reduce to it? Any plans for inorganic expansion?
So, if you see, as compared so that this exercise has already been done, and the same can be seen in FY26 also. If we compare between FY26 and FY25, our purchases from the company reduced drastically from 90 to 92%. It came down to roughly 30%. And we are, making efforts of bringing down even more. Uh, yeah.
Yes, Ms. Jagruti, please go ahead.
Sir, I have a question for you. What was the average capacity utilization of your Visakhapatnam and Andhra Pradesh facility during FY26, and how do you intend a scalp up procurement to feed the massive 55,000 MT target infrastructure without overextending working capital?
So if I get your question right, you wanted to ask how we are going to do the procurement of entire 55,000 tons, right?
Yes, sir.
So, as you know, we are into this industry in raw cashew nuts from last 13 years. I have personally been trading into raw cashew nuts from last 13 years from all the African countries, whereby we've been able to set up a good source of network for the procurement. So that gives us immense confidence that we are going to secure our raw materials of 55,000 tons, because this quantity is something which is like not which is new to us. So these quantities I've been doing in the past. So that brings us to this confidence that we can secure the entire production of 55,000 tons and can ramp it up our utilization capacities as fast as possible.
Thank you, sir.
Ketan sir, please go ahead.
Yeah, thank you for the opportunity. Thank you for the opportunity. And my question is on this branded product, Royal Meva. What is the traction over there? What is like over there in FY26, and what is the outlook ahead? What kind of investments into marketing that you are going to do for this product, and what kind of growth can we expect from there?
So, we launched Royal Meva in the last quarter of FY25, and FY26 was the first full year for our brand. So, even then, we made considerable amount of progress with the brand. And this year, again, we are consistently trying to increase our market share, our overall share. We have been very, very cautious when it comes to B2C brand, because B2C, we all understand that it's heavily dominated by extremely VC funded guys. So we are not compromising on bottom lines at all in just to achieve the market share. So we are selecting our channels very, very carefully. We are doing our trials and errors in different channels very, very selectively without compromising on the bottom line. In terms of marketing efforts, yes, we will be spending, we have been spending some amount of money on the social platforms, and we'll continue to do that in order to gain traction. Moving forward, we are listed on e-commerce portals, but the process to get listed on quick commerce is also in process. So with this, and also we've also started. We are also in the process of listing it in a lot of government organizations wherein we get traction. So this way, selectively, we are doing it, and we hope that we achieve good traction. In the next 4 to 5 years, we aim to achieve at least 10 to 15% of our total revenue coming in from our business.
For the FY27, what are the biggest challenges that you think can really uh, reduce the kind of growth that you are expecting of 35 to 40%?
So for FY27, I think the real challenge which was there is we see it is almost over now. So it was all about the political uncertainties which we were seeing all around us. So as those things are cooling down, so we see. I mean, that was the worst which we were seeing that could happen this year by affecting some supply chains for us and increasing the cost further for us for the freight cost and the even the local supply chain for everyone, even for our vendors and everyone. So that is the challenge, so which is being reduced now. So and with this comes the forex challenge also. So like now things are getting again under control. So we see that yes, some forex has also increased, but going further down this year, so we have to keep an close eye only on these three or four things. One is our forex, that how does the dollar versus rupees depreciate further this year, or whether our Indian government can control the currency exchange rate. And then is about the shipping freight cost, so which we see by talking to several vendors. We see that now it does not. They do not see any upward trend from here for the freight cost. So yes. I think those are the main challenges which we see this year, and we are trying to all overcome that.
Okay. If I can ask one more question, your cash flow for this current year is operating in this negative, if I'm not wrong. And your short-term debt, even after the IPO, has gone up almost to around 34 crores. So, is it the short-term debt rise because of working capital that you have raised increased during the year? And what kind of cash flow position you're expecting for yourself for the FY27?
So, the increase in short-term debt is attributable to the increase in working capital limits from the financial institutions. So that is that. In terms of cash flow, that was the reason for our cash flow being negative was primarily because February is when the war was on the verge of getting started. So we had, paid since, we are sitting at the least inventory levels in March. We had funds to pay to the suppliers in advance so that we could save ourselves on the forex because we were looking envisaging that the rupee will depreciate if the war starts, and that is exactly what happened. So in order to save ourselves from the incremental dose, so a part of it was had a part of it went to the suppliers in advance, and that is the reason why our cash flow was negative.
All right, I'll take that. Thank you.
So we have few questions in the chat box. Any plans for inorganic expansion?
So, inorganic expansion. So, other than cashew, we are doing almonds, pistachios, and all in our brand Royal Meva. But for the time being, till the time, as Pulkit mentioned, our primary focus is to reach the 85% capacity levels from the new plant. Till then, we will keep on, pushing as and when the other products through our brand. Secondly, our focus, once our plant is operational in December, the next focus will come on to, CNSL, which is a category that we have already started, studying. And we don't want to limit it to, just the technical CNSL. We also want to get into production of biofuels, which is now, the technology is there, though it is in its nascent stage, but we're just trying to speak to the right people and figure out how we can.
So we have next question. Your sourcing is still heavily dependent on Africa. Are you comfortable with that level of concentration?
Yes, we are very comfortable with that concentration because it is actually it balances out that ways. If you see the entire world scenario of the cashew production versus India cashew production and the cashew consumption of the world versus India cashew consumption, so India is deficient in its production according to the consumption it has. So India will always be a net importer of raw cashew nuts until unless India strengthen its position to domestically grow more cashews.
Yes, Ms. Mehak, please go ahead.
Am I audible?
Yes.
So just now you've mentioned that we are very much focused on our margins and we will not compromise our margins anyhow with the growth of our Royal Meva. So Royal Meva is basically will help you grow in the B2C segment. So what exactly is the current trend that we have observed in the margin for the B2C side of Royal Meva? Like what is the basically segregation of the margins in the B2B side that we are doing for the from the processing prospects and the Royal Meva from the B2C perspective?
So, there is, what we are seeing currently and the channels that we are selling in at. there is a 2 to 3 point difference in the margins that we are getting from Royal Niva. Having said that, today we are also supplying to the largest packers and roasters and processors of the country. And if we compare their prices to our prices are higher than.
Okay, so in the B2C segment, what percentage of margins are we actually doing?
So on a EBITDA level, it would be about anywhere around 17-18%.
17-18%. Okay. Okay. Additionally, how much percentage of contribution does B2C, the Royal Maver, contribute in the overall revenue segmentation in the year
Last
financial year 26?
was about 3%.
3%. And by what percentage are we expecting it to increase in financial year 27 and 28?
In FY27, we are looking that we should have about 5% of revenue coming in from Royal Niva. And probably this is the kind of growth trajectory that we assume moving in FY28 also. Yeah.
Okay. Now talking about your CNSL side of it, that after your 55 metric ton capacity being utilized on an optimal level of 85%, so CNSL will be your phase two. And by what time are we planning CNSL to be operational?
So, to be operational, we feel that if not FY28, then by FY29, it should be operational.
Yes.
Okay, and how much capacity are we seeing in the CNSL plant?
So, the raw material that goes into CMSL, that will be about 100 tons per day kind of a line, because that is once we are processing about 160 metric tons per day. So that is the kind of cashew shell that we will generate, and that is the capacity, about 100 to 120 metric tons
Per day of CNSL or the process, that the waste RCN thing to be
of cashew
processed?
shells being going on to production.
Okay. And how much of the CNSL will be produced from those 100 to 160 metric ton of RCN waste?
So that is technically CMSL is about 18 to 19%.
Okay, 18 to 19%. And also we currently mentioned that the biofield will be the phase three sort of expansion strategy that we are looking into it. So for the biofuel, when are we planning to incorporate it into our business model?
So, as I mentioned that, we are talking to the technology people, and if we get the right kind of technology on hands, so we might, plan it from the initial days only. But in case we are not able to get the desired technology, then, post FY28 or FY29, once we have the technical grade volume, we will immediately get into that.
Okay, so how are we seeing the market for the cashew processing going forward? Like currently, that the Vietnamese market facing tariff from the US, and now the China is taking the advantage from that side because of the increased demand from the Vietnamese market. So, are we seeing that as a restriction or as a competition from the Chinese market also? Like the as an overall processing industry that the India caters to.
No, so just to give you a highlight and the background of the cashew consumption pattern. So India standalone is about 35 to 40% of the consumer of worldwide cashew. So India is 35 to 40%, and then rest of the world is about 65% of the consumer. So now what happens is the Indian market is totally fed by the Indian processors. because the raw cashew nuts are imported in India, and India also grows a part of its production, and India does not allow the imports of the finished kernels. So Indian industry is altogether in the India. Cashews are processed in India and are sold in India, and some of them, some percentage is now exported also out of the country. But the export markets are predominantly dominated by Vietnamese and now some African countries as well. So processing is happening in Africa at the source and in Vietnam, so which is going to the international markets. So in order, as you asked, for us to strengthen ourselves and see how do we see ourselves in the market, so that is how we appointed an advisor on board, Mr. Wu Thai Son from Vietnam. He is one of the largest cashew processor in the world and one of the oldest and the most experienced person in the industry. So he is on board with us to advise us on establishing our footprints across overseas. So we don't only see ourselves being as a domestic player, but we see ourselves as an international player also, and we are laying strong grounds to enter the international market and the international manufacturing facilities.
So, like we are planning to go international as well. So, have we received any sort of order, or when are we, if not, then when are we planning to go international as well?
So as the plans are on and we have got an advisor on board, so you will see, our numbers in FY 28 to be strong enough to support our international growth.
Okay, and which international markets are we focusing?
So there are a couple of things, one is the uh, the export markets from India, which could be Middle East, Saudi, Japan. The premium markets, because India has a very premium product. So those premium markets, and then also we will be looking at good European and US markets. So we are exploring our all the options for expanding even our facilities beyond India to cater to those markets.
Okay, okay, understood. That's all from my side. Thank you.
You're welcome.
So we have few questions in the chat box. The IPO was primarily for expansion. Beyond this project, do you see any need to raise equity again in the next few years?
Yes, yes, we do. So we are strongly laying our plans to grow further beyond these capacities which we currently have and the plans we currently have. So for that, definitely we see that we'll be raising more funds.
I want to understand the demand scenario in the recent months in context to commentary from PM Modi to reduce the consumption and the post-Iran allowing the passage of Hormuz. How is the demand scenario looking? Please provide me some light on it.
So the demand from the last 2 weeks has picked up considerably. What we have seen is that we are already in July now, and as we approach August, we are about to approach the festive season, which starts off with Raksha Bandhan and then goes on to Diwali. And post Diwali is the wedding season, and the festivals continue up till Holi and Eid, till March and April. So we have already seen the traction started coming in. The demand is pretty good. We have inquiries from all around India for products which are ranging from cashew holes to even the sweet manufacturers are lining up, and they want to secure their inventories for the upcoming festive season. The other industry people, such as the Horeca segment, the biscuit manufacturers, the ice cream segment, all these manufacturers are now looking at securing their inventories for the festive season. So we are very, very bullish on the demand. We can't hear you. You're on mute.
Sorry, sir. Management talking about 70,000 metric tons capacity by FY30. What is the demand visibility today to support that kind of expansion?
So, if you see, roughly 80% of our revenue is coming from the same set of customers that we have, and it is year on year, we are getting the same repeated revenue. We are not able to, add new customers. Also, the current customers that we already have, such as Reliance, Natraj, Farmville, they are consistently asking us to increase volumes from the current levels. So all of this put together, we feel that demand will not be a problem. Back in the day, cashew processing, they did not have such large plants, but now with such large plants coming into play, large institutions are looking for established players such as us who can fulfill the commitments on time and are consistent at the same time. So, you're on mute
Again,
again.
Apart from the capacity addition, what do you think will be the biggest earnings driver over the next 3 years?
So, apart from the capacity expansion, our focus on efficiencies in all three aspects, which is procurement, processing, and sales. That is it is our constant endeavor to increase our efficiencies, at all levels. So definitely these improvement in efficiencies will definitely contribute to the bottom lines, apart from the capacity expansion. And then we also feel that once we will reach the desired level of this enhanced capacity, which is about 85%, our cost of production will come down, and that will also help. So all these points will contribute to the growth.
Chetan sir, please go ahead.
Yeah, my questions again on the Royal Meva brand. In your financials this year, I think you just said this year 5% of the revenue will come from it. So at the segmental level, would it be possible to break down the revenue and the asset allocated to it so that we get a better sense of how much B2B business is contributing and what kind of traction the B2C business is giving us in the overall financials?
In terms of asset value, you mean what kind of infrastructure do we have for Royal Liver?
Yes, yes, yes.
Okay. In terms of the infrastructure, majority of it goes towards processing. For the Royal Meva, we have a facility in Delhi where we have roasters, ovens, and all of that. But that's not a very big chunk of the overall asset that we have.
Okay. And
so for setting up or creating a brand, packing and all this does not require any heavy asset. So it is more of the positioning and heavy expenditure on marketing to grow that. So that is there. While the fixed asset, if you mean that, so that is not really significant to create that.
all right, I take it. Thank you. That's it from my side.
As you scale up, do you see Pajson becoming more of a branded food company or remaining primarily a processing company?
Definitely, we look at becoming. So we are very, very strong in B2B. We would like to call ourselves that we have a very, very strong B2B brand, and that is how we have positioned ourselves, and that is how we see today the largest institutions placing their trust in us, and coming back to us month on month, year on year. So definitely, we will, take this forward, and we'll continue to make sure that our B2B brand, our presence keeps on increasing and strengthening as we move forward and as we expand.
Because also you have to see over here, the consumption pattern is in India is mostly on the B2B side. It is very less on the B2C side, the consumption wise. So we have to follow the consumption patterns of the country and strengthen our branding over there. So which is broadly B2B.
Investors, you can raise your hand or you can drop your questions in the chat box. So we have question. How do you differentiate yourself from larger organized cash flow processors that already have stronger balance sheets?
So we are very, very different. And when you say larger processors, so so this industry has been very scattered all along the years. It is a very fragmented and unorganized industry. So it is changing the shape as we speak from last couple of years. So as our current facility, so when we are going to take our current facility to 55 or 60,000 tons, so we are going to be amongst number one in India, so amongst top three in India, I would say. So that means it clearly shows that a larger capacity players are very, very less in the market. There are only very few players in that, and still till date the market is very fragmented and scattered amongst a smaller number of players ranging from 1,500 to up to 3,000 tons of capacity per annum, whereby we are operating currently at 18,000 tons and we plan to take it up to 55,000 tons soon. So with that quantum, we currently there are only uh, four or five players in the industry, and that's it.
When you expect 1,000 crore sales with that expansion? When can you expect 1,000 crore sales with that with the expansion?
So by FY 30, as we have planned to reach 65 to 70,000 metric tons, definitely we should be hitting that number.
What is your long-term target in terms of capacity, which you are targeting in 5 to 10 years?
So, as mentioned earlier, also we have very aggressive plans to grow our capacities, not only in India and beyond India also. And if we talk about next 10 years, so we definitely see taking our capacities up to more than 200,000 tons per annum from where we currently are, and that would be requiring, expanding our capacities in India and beyond India, for which we have already started laying down our plans, and we are very sure with our current strategy and change in strategy by bringing Mr. Wu Thaison is going to help us achieve this much faster.
Investors, you can raise your hand or you can drop your questions in the chat box. What steps are being taken to strengthen the brand and customer relationships?
So there are primarily two or three things that define how we make sure customer stickiness. The largest being, having consistent volumes and consistent qualities. So that has been our biggest endeavor, that we place a lot of focus on QCs. Our QC process is extremely stringent, which has multiple checkpoints, so that the consumers don't face issues as far as the quality is concerned. And that is primarily the reason why we see the repeat revenue of 80% from the same set of customers. Secondly, relationship building remains at the core of our entire strategy, and we continuously are meeting our clients, our customers, trying to understand their needs, any changes that they want from time to time, any differentiation in product that they want from time to time, and developing the product with them. And that is how we make sure that the relationship does not only uh, it continues to grow as we live. So that is what we continue to do. You're on mute again.
Any plans to decrease electricity expenses by using solar, and how much electricity expenses percentage wise, how much percentage margin can improve with solar power?
So definitely, we have been thinking, and we have wanting to appoint a few consultants to study on this, but as we see that it is definitely going to reduce our cost. So we have not explored the exact numbers yet, that how much difference it is going to give us on the balance sheet, but we know definitely that it is a good proposition to further increase our margins, and we are definitely working on it. And in the coming years, we will be having solar as well.
Investors, next question, please. So I think we have covered most of the questions, and if there are no further questions, shall we conclude the meeting?
Yes, please.
Thank you everyone for joining this session. And if you have any further questions, you can reach out to us at research@kirinadvisors.com. Thank you, sir, and thank you everyone. Have a wonderful day.
Thank you.